program is brought to you by realestate.com.au. See more of every property on the realestate.com.au app.
Thanks for being with us here on Business Now. Let's take a look at the weekend home auction markets and look at it and tell you it was pretty strong out there, given it was grand final day in the NRL for those in Sydney, Brisbane and Melbourne, plus of course a public holiday in most of the states. So across the country there were 1,682 auctions and around 2/3 of those were sold. Sydney a little quieter, 519 auctions, its clearance rate sitting at 60.7%. Melbourne played a bit of catch up after last weekend's public holiday, 767 auctions there. 73% of those were successful, which is strong. Brisbane had 95 auctions and the clearance rate above 65%. That's not bad for Brisbane. Adelaide's still really strong. 51 auctions, more than 82% of those were sold. And in Canberra, 50 auctions and 76% of those went under the hammer. Well, a little earlier, I spoke with Angus, the senior economist at REA Group, and just asked him about the impact of the start of the government's 5% deposit scheme for first home buyers, its impact on the housing markets.
I think that's a really good way to frame this policy. It's essentially the government providing LMI, which was previously done by private insurers, to first home buyers, allowing them to buy with as small as a 5% deposit. In terms of the effect that this is going to have, I'll give the sort of perhaps unsatisfying answer, which is it's a little bit hard to know because we don't have a lot of examples of this policy at this sort of level, at a national level in the past to kind of key off. What we do know is in its previous incarnation, where it was capped at 50,000 places a year, it was pretty popular. In the last year that we have data for, it was basically fully exhausted, all 50,000 places. So I'd expect to see reasonable take-up. But in terms of how many new first-time buyers it generates, government estimates are somewhere in the order of 10 to 20% more first-time buyers making up about a sixth of the housing market. So maybe not a huge effect overall, but certainly some extra demand there.
I understand the issue of potential buyers having a hurdle to try and accumulate a mortgage if they're trying to get 20% deposit. But the real issue that I have is whether trying to give incentive for first home buyers to get into the market in this way might also skew the markets, that people who probably shouldn't have otherwise got a loan may suddenly be able to get one.
Yeah, it's an interesting question. And I think it's also important to frame it in the context of what this policy is trying to achieve, which, as you say, is getting over that deposit hurdle, which, is a big hurdle for many first-time buyers. But I think importantly, it isn't the only hurdle. The other thing that really constrains a lot of first-time buyers, particularly at the moment, is what we call mortgage serviceability, which is essentially how much can you actually borrow and what can you buy with what you can borrow. At the moment, with interest rates at quite high levels, with prices at very high levels, particularly in the smaller capitals having risen very, very rapidly in recent years, that serviceability constraint is also a real hindrance for many first-time buyers, which is a real change from what it was a few years ago during the pandemic when rates were at record lows.
So that might actually be the saviour for some people. I'm not putting the wrong spin on this. I'm trying to say that if you go and have a look at the cause of the global financial crisis, which was people who shouldn't have got mortgages getting mortgages, if you go back in history and look at Australia's 1990s recession, in many ways triggered by a housing bubble when people again got mortgages they shouldn't have, this is the real dilemma, I think. So maybe what you're describing there is actually a natural protection for the banking industry and even our economy.
Yeah, I think, fundamentally what you're describing there comes down to bad lending practices and essentially a lack of serviceability constraints. And so, the issue there was not so much that, and though it was subsequently, not so much the collateral, which is what the deposit's about and, what the government's ultimately guaranteeing, i.e. the value of the house if the loan were to default. The problem that we got into in 2008 and to some extent in 1990 was that people simply couldn't pay their loans. And that's what assessing serviceability is about. The RBA, the APRA and macroprudential policy are still very closely watching, how banks assess serviceability to ensure that people can reasonably make the payments on their loans. To date, mortgage arrears remain low despite big increases in interest rate and mortgage payments. But, certainly a live risk and not one we want to repeat given the costs of the 2008 crisis.
There's no doubt about that. I think we would both wholeheartedly agree on that. But then there's a second factor as well, is just because you can get a mortgage and there's serviceability barriers there, it doesn't necessarily mean you can find a home that is affordable for you. And we can see even with building approvals, there's not the number of homes being built to satisfy demand and therefore stabilising prices.
Yeah, exactly right, Ross. And I think that's maybe the bit that we've been missing in this discussion, which is it's all well and good to help first home buyers get over that deposit hurdle, but fundamentally that does not solve housing affordability. Solving housing affordability sustainably over the long term is about building more homes. And at the moment, unfortunately, we're just not. Building approvals numbers, as you say, came out this week. Still pretty soft. We're tracking about 75% of what we would need to be approving to be hitting that 1.2 million over 5-year target that the National Cabinet has. So, unless that changes, housing is going to continue to be quite unaffordable.
And therefore, it might also be exacerbated by the fact that there may not be as many interest rate cuts in front of us as we might have anticipated.
Yeah, exactly right. The other part of mortgage affordability, of course, is not just the price of the home, but what you have to pay on that mortgage, which, is fundamentally down to the Reserve Bank. And, unfortunately for us mortgage holders this week, we didn't see a cut. That was widely expected. But I think, the perhaps surprise is too strong, but, news coming out of the meeting was the fairly hawkish tone from the RBA. They're pretty concerned that inflation's going to have been stronger in September than they were thinking. That's made the November cut, which had been looking like about a 3/4% chance, 3 and 4 chance, drop down to about a 50-50 now. And really, we'll find out at the end of October where inflation lands, and that's going to determine whether we see another cut this year.
I'll tell you what, Angus Moore, always good to chat to you on the program. Many thanks for your time today.
Pleasure as always. Thanks, Ross.